Good evening, viewers. Accounting Equation Academy YouTube channel presenting today's one problem from the chapter Income from Other Sources. So this is the fifth and residuary head, and under this chapter income taxable given section 56 section 56 section 56 subsection 1 and section 56 subsection 2 have given general incomes and specified income that are chargeable under this head income from other sources. General income, when it is taxable under section 56 subsection 1, say here the section 56 and subsection 1 and section 56 subsection 2. Section 56 subsection 1 given the list of general income, and this section operates only when a particular income cannot be included in any other head. So this is the income if other four heads of income. In these four heads of income, if any particular income is not included, then such income will be taxable under income from other sources. So as the scope of income is much wider, and income tax has defined that anything which can be described as income and it is taxable under the act unless expressly exempted, then it is chargeable to tax. So few incomes which falls under general incomes category in this head, say for example few incomes like income received by an assessee from a person other than his employer, like university remuneration received by a teacher, by examination of answer script, by paper setting, then this remuneration will become under general category. Similarly, interest on loan, securities, deposit and current account and fixed deposit account, saving bank account, interest received, this is the income under this head. Okay, and income received on subletting of the house. Similarly, family pension received by legal heirs of employee are some income which are classified under general income categories and chargeable to tax. Similarly, a specified income section 56 subsection 2 has given list like a dividend received on shares, equity shares, preference shares, and casual incomes like winning from lotteries, crossword puzzles, races, including horse race, card games, and other games of any sort, or from gambling or betting of any form or nature whatsoever. These can be called as casual income and taxable. So these incomes fall under section 56 subsection 2. Okay, and similarly others income gift received by a SSC, it is chargeable under this income. Many more incomes are there which are included under specified incomes. So today I have taken one simple problem, computation of income from other sources. The problem is on your screen. That question is given here. See the questions. Compute income from other sources from particulars given below. So like here, interest on deposit with a company rupees 10,000, university remuneration for working as examiner rupees 6,000 received by an SSC, royalty for writing books rupees 60,000. He claims to have spent rupees 20,000 on writing these books, so expenditures incurred to earn income is allowable deduction. Declared by our company on 1st March 2023 but paid on 1st May 2023. So our accounting year is 1st April 2022 to 31st March 2023. And when the dividend is declared, that is, it is deemed to be received on this date, and since the date of declaration of dividend is in this previous year before 31st March 2023, so then we will consider that this is the income of this previous year 2022-23, although it's received in the next year. So in the next this period is falling in next financial period, that is previous year 2023-24. So on the basis of declaration, it is computed as income in that particular previous year. And interim dividend is also taxable, paid on 1st May 2022, so it is falling within 2022-23, so it is taxable. And stake money on race horses rupees 1,50,000. Horses are maintained by Mr. SSC, and expenses on maintenance of these horses are rupees 2,40,000. Then one more point here, family pension received rupees 36,000. So this is the questions. So then how this question is solved under income from other sources. So solutions I am presenting, keeping in mind various section, deductible sections, non-deductible sections are applicable, rules applicable on the basis of income tax provision. This problem has been solved. So here the solutions. This is the solutions of this. So here the name of person is not given. Income from other sources, only name place is blank here. Say computation of income from other sources of a resident individual for the assessment year 2023-24 relating to previous year 2022-23. So every time we are writing this title and by changing the name of person and sources of income. Now here, as per the questions, here just now you have seen the questions. Here, interest on deposit with a company, it is taxable, 10,000 rupees. Given university remuneration for working as examiner, 6,000 is given in the questions. Royalty for writing books, so he is writer, he is writing books, and he has received royalty rupees 60,000, and while writing these books he has spent rupees 20,000. So this 20,000 is allowable deduction under section 57. So that is expenses. This expenses is deductible under section 57. Rupees 20,000 and 40,000 is taxable amount. And here the dividend declared by our company on 1st March 2023, it is given in the question, 6,000. Interim dividend is given 3,000, and stake money on race horses 1,50,000, less expenses on maintenance of horses, this is 2,40,000. So this 1,50,000 is income, expenses is 2,40,000. So expenses is more than income, and here this is the loss, and the loss to be carried forward. This loss you cannot set off against other source of income. It is given under Income Tax Act that loss from owning and maintenance of horses shall be set off only out of the income from owning and maintenance of horses. Notes here, you see the notes I have given. One note is here regarding this carry forward of loss. Here this is out of only income from owning and maintenance of horses. So that means the loss from owning and maintenance of horses, if any there, then this loss you cannot set off from other source of income, others from other source of income in the same head, unless you have income from the owning and maintenance of horses. And here clearly given that this means that the loss from the activity of owning and maintaining race horses cannot be set up against any other income. That is, though we have income from the interest on deposit with a company, university remuneration income, royalty income, but out of this income this loss cannot be deducted. In this case, so as per income tax provision, that this is given that any other income falling under the head other sources, and here clearly given that it can be carried forward, it can be carried forward for set off against income of future year, against income of future year. That means in near future, if there is any income from owning and maintenance of horses, then out of that income this loss can be deducted in that respective year with certain limitation. So this is given under section 74 capital A, section 74A, that carried forward. So it can be carried forward for set off against income of future year by saying section 74A. Alright, so this section 74 here is small here. This is section 74 capital A, this one. Okay, and as per these provisions, this loss amount has not been written in second column here, this amount, because of this loss we cannot deduct from others income. And show why. This is income loss to be carried forward is written here, 90,000. Okay, and a family pension is given in the question, 36,000 rupees family pension received. And family pension means here when an employee retired from the service and he is getting the pension, and the same pension after his death, if his family is receiving, then it is family pension. And when an employee receiving the pension during his surviving, then this will be taxable under the head income from salary. But the same pension if started receiving by his family after his death, then the same income will be taxable under the head income from other sources. And there is a deduction available under this, and this deduction is available also under section 57. So section 57 has given deduction by setting a specific rules, that family pension 36,000. The rule is here, 1/3 of family pension received or 15,000, whichever is less, is deductible amount under section 57. So 1/3 of 36,000, it is rupees 12,000, and 12,000, and this is the statutory amount fixed by provision of income tax, 15,000. So then you should compare with 12,000, 1/3 of amount of pension received. So when you divide it, so it is coming 12,000, and you compare with 15,000, the least amount is eligible for deduction, 12,000 or rupees 15,000. So the least amount is 12,000, so hence this amount is deducted from 36,000 minus 12,000, so 24,000. And hence, so when we total it, the second column, 10,000, 10,000, 6,000, 40,000 plus 6,000 plus 3,000 plus 24,000, then your income from other sources is 89,000. So this is the problem. So all of you watch it and see, and very slowly I have explained you, so you can write the questions in your copy and solution, and note down the notes given, practice all of you, and don't forget to like and subscribe and give your comments also. Okay students, so this is a simple problem. So in the next class, video class, you will get another problem considering different provisions. Many more are there. Okay, thank you very much.